So Sammy, I think we should be live right now. This will be if we're live, then obviously this is the only time we've done it without a lot of hiccups. So
There you
hopefully
go.
we've done it without some
Are
hiccups.
we live, folks? Can someone say hello just to make
Well,
sure?
and I'll keep looking to make sure people are saying hello to us, all that good stuff. And so my wife gives me a thumbs up. And yes, I get told that I'm looking up and looking around. I've got multiple.
Did we let people know that are going on the challenge about the wealth debate? Did we do that?
No, we should have.
Yes, we
We can
should.
do that for next week. We'll
Yeah,
obviously talk about it in the
yeah,
thing next week. But so
sure.
if you are here on the wealth debate right now, I am going back to make sure that I can talk to everybody on the wealth debate. So please comment in there. Rodrigo is here in the
Nice.
house. Rodrigo, great to have you. I know last time you had to watch it on a replay. So great to have you, Rodrigo. Anybody else that's watching, if you could shout out hello, we appreciate that. We thrive on all of the interaction. So anything that you can do to say hello, we appreciate that.
If you don't know, we'll remind you. This is Pip Stellick and Sam Musa coming to you live on the Wealth Debate Show. I'm going to continue to call that, and hopefully we'll catch on. And we're here to talk and rant about money, things about money, wealth, and wealth creation, and disparity of wealth, and economy, things that we should know that maybe we don't understand, that maybe we should be learning in school. Definitely something we want to teach our kids. Before we get started into the meat and potatoes, let's talk a little bit about headlines. Donald Trump. Oh,
Before
sorry.
we talk about headlines,
Sure.
I want to know first of all where Rodrigo is from, and we've also got a Kiwi on the call right now from Auckland, New Zealand.
There you go.
So that's
Worldwide.
always cool.
We're an international show now, Pep.
Well, we've been international since the very first one, but we're even more international than you can even imagine. I can't even imagine how international we are. So I just want to, I didn't think it was possible to go on international media and you could do it in pajama pants. I did not know that. Did not even know that was an option. I know. And beautiful. Business up top, leisure on the bottom. That's what it's all about.
This is a very serious show.
It's pretty, I'm not even business on the top. It doesn't matter. I'm just Mr. Casual. So it is cool that we can see people all around the world. Obviously, Facebook allows us, the internet allows us to do that. Yes. So Sam, I'm going to let you start to talk about a little bit of the topics of the day or the week.
Yeah. Let's call them. Yeah. So some news, in the United States, looks like Donald Trump's going for a second impeachment opportunity. I like to call things like that opportunities. Not that it means much. I think it's posturing. In my opinion, not much is going to happen in the way of actually execution of that. It's tough to say as the transfer of power happens in the coming days. It doesn't look like it'll actually go anywhere, but who knows? I mean, it's weirder things have happened. So that's kind of the news. This is the impeachment is because of inciting a riot at the Capitol. Again, we don't know really where that's going to go, if there's anything to it, or what it'll actually mean. And something, I guess, for Donald Trump, or maybe will agitate his supporters more. Who knows what will happen? A lot of the media companies, like social media companies, are trying to control the outspoken messages and tweets from those who are inciting, I'm saying this in quotes, inciting violence in reference to the Capitol Hill and situation with Donald Trump. So there seems to be an undercurrent in the country. A small group, looks like, that are willing to take some sort of action. So I'm sure we haven't heard the last of the Donald Trump coup or uproar from some countrymen. So we'll see. I'm Canadian, so I don't want to speak too much out of turn, but those Americans, man, they do everything big and the best and first. That's what they do. So this will be an interesting part of the history. You know what? I shouldn't have said first. Americans are great at taking something that's been done and making it better. So often they're not first, but they're often last and bigger than anybody else. They just do it in a way that is different than anybody else. Pip, you want to say something in reference?
I was just gonna say, I think on a whole, the USS a little bit on the competitive side,
Yeah, a little bit.
just a little bit.
which is one of the reasons the United States does so well is it ultimately it recognizes, and I believe this, recognizes the importance of protecting the individual and the individual's rights. I do believe that's the most important thing that a government can do. So when you see some of the rights in tougher times like 9/11 and other tragedies or crisis in the United States, when they take away those rights, that's a really scary thing, especially for the Americans. So
I do want to say something on that.
yeah, sure.
I've had the opportunity, and Sam has as well. And this is one of those things that I look back, and I know Hadley's on here from New Zealand. I don't know if he can speak to this. And so I had the opportunity to go all around the world and teach. And I think there was always this mentality, because when I did this, the company that I was contracting for, Rich Dad Legacy, those guys, Tigrant, whatever terminology they were using, they were headquartering their international division out of the UK. And I think they strategically did that because I think there was a mentality that an American going into another country could be a bit of a challenge, if you will. And so what I want to say is, first of all, it's not Americans, it's people versus people. We're all people. And I definitely, and I'm going to give you my example of this. First of all, I had the opportunity to teach all across Canada. And quite frankly, I think I felt like I was welcomed by the Canadians because I respected Canadians. I respect their culture. As long as you respect people, I think they're going to reciprocate. So I don't care what's going on, because I remember teaching in Australia and all around the world. And this was when Trump was going to maybe be president. He was running. And I don't think I ever had any issue with being a bad American because I was associated with a certain person or something like that. But the one thing I want to say, Sam, and I think and why I want to say this, it comes back to people. And I obviously, and I don't know if Hadley can verify this, because I don't know if he could say this, but the guy that was in charge of the international, or the guy that was in charge of our company, his name was Ian, and maybe Ian will see this and hear this, I don't know. And I said to him, he goes, what do you think? I was going to different international markets. He goes, what do you think are you going to be okay going there? What do you think as an American? I said, Ian, here's my goal. I said, I'm not going to do it on the first event, but I'll try it on my second if it goes well. I said, I'm going to have a bunch of people and then my second event was in Switzerland. I said, I'm going to have a bunch of people in Switzerland standing on their chairs, yelling USA, USA. And he literally thought I was insane. I said, every country I'm going to go to, I'm going to ask them to do that. And I got a text or an email back from one of my Aussie students, and he said, I never would have thought an American could get a bunch of Aussies standing on their chairs yelling USA, USA. So it's not, and I think a lot of times we group it as the Americans. It's people versus people. There are good people here, there are bad people here, and it's the same way in any country. And unfortunately, the bad people get the majority of the press. And I hate that, but I can't change that. So as long as, and Sam and I talk a lot about money, I think as long as you have the mentality of you're solving people's problems and you're adding value and you're doing it with an integrity way, an ethical way, you're going to be all right. That's my 2 cents. I had to say that. So USA.
People are people.
USA.
People are people. We're taking it back. We're taking it back. People are people. This is good. Okay, so thank you for that, Pep.
Had nothing to do with what you were talking about.
No,
but I had to go there.
you were, and of course, you weren't representing Americans. You were representing people. That's the important thing.
That's exactly
That's
right.
what you're talking about. So, continuing with the headlines, CNN reports that they believe that the lowest 20% of the population in the United States, the lower income earners in the United States have an unemployment rate around 20%, which is astronomical, of course. Now, this isn't the unemployment rate of the country, which is under 7%, mid to low sixes. It's moving in that range right now. It peaked when COVID hit, March, April, we saw double digits. It was brief because of the shutdown, but definitely a concern in the United States. Also in Canada, we've had multiple provinces asking for close to a full shutdown. Essential workers are allowed to move about. If you're an essential worker, you can move about, but there are many of the companies are issuing letters as of today, midnight today, yes, midnight or 12:01 a.m., you can be charged or fined, my apologies, fined for being out if you're not going to the pharmacy or groceries or some essential reason that you're going out. You could be fined, which is something that was always kind of there, but now it's something that they believe is going to be more active. So Ontario and Quebec have really pushed hard on this. Other provinces are contemplating what they're doing. In Quebec, province of Quebec, we had curfew. 8 o'clock curfew was the last date time that they were talking about. So again, essential only. So it's a bigger lockdown situation in Canada, or the drive versus the US. We were talking about this yesterday, Pep. The percentage of people that have been affected relative to both countries. You were saying, Pep, if you want to go ahead and talk a little bit about that.
Obviously, be careful with any statistics. What's
Yes.
the last? There was a statistic I heard one time, 84% of statistics are made up on the spot. So there you go. I don't know what the
That's right. 84.
well, I know 83.8% of statistics are made up on that spot. Anyway,
It's probably higher. It's probably higher.
the one statistic that I was showing Sam yesterday, and obviously we know how many people live in Canada, and we have a pretty good idea how many people live in the US. And so using those numbers, that's the first number we have to agree on. How many people live in the US? It's 330 million or whatever it is. How many people live in Canada? It's 38 or 39 million. We know those numbers. I think nobody would really argue too much. Now, I'm sure some people would like to argue who are legals and who are illegals. I get all that. People love to argue. But the point I want to make on that is, if you look at the US statistics, if you believe the statistics, it's a little over 6% of the US population has contracted COVID, according to certain websites. And I think it's about 1.7% of Canadians. Yet Canada shutting it down, no issues. You're not going anywhere. Whereas state by state, we've seen some variations, and even some of the states that were really shut down 6 months ago, or even New York State starting to open up. Now people are going to politicize that and say, well, now that Biden's in office, that's why Cuomo is going to do that. We can have that argument all day long. Nobody wins that argument. But the point is, I think the US is saying, we're going to act as the way we want to act, right or wrong. That's how we've always done things. Is it always the best? But that's what they do.
It's a dilemma in countries that are used to a certain sort of liberty and freedom to be told they can't do things. So, and I would say that the United States enjoys the greatest amount of individual freedom. So it's going to resist that more than anybody, I think. And freedom doesn't always mean, it doesn't always come out to be a positive thing. On the most part, I would say it does, but there is no freedom without responsibility. So you have to live with the consequences of that situation by giving that freedom. So the one point I wanted to bring up is referencing back to what we like to talk about tonight is what does it mean, when you hear statistics of, the lower income people, 20% unemployment. What does that mean for the economy? Why are we seeing the United States, the New York Stock Exchange, but it's not just the New York Stock Exchange, but many exchanges around the world. Why do we see them record-breaking numbers? Why do we see real estate in many areas and regions exploding? And what does that mean for the economy, the future of the economy? So some of the things that are concerning is when the economy doesn't have production, no real GDP, is relative to say the last year, the GDP is going to be nominal, very small compared to what it was. Huge drop relative. If you worked at it as a percentage, it'll be a huge drop. Yet we're seeing these asset classes of stock and real estate, which are two huge biggest asset classes, going up. So what we're seeing is the money that was diverted through these governments being driven to the average person. A lot of that money is going to those asset classes, so real estate and the stock market. Now, what's the problem with that? Well, the money was really given not for these two asset classes, but for consumption, for regular, normal consumption. And the difference is when you have consumption, the things that you consume, the value of that deteriorates over time, which is okay, because you're going to produce some more, you're going to produce some stuff, you're going to make some more money and have more production. When the money gets diverted to stock market and real estate, here's the challenge. So as these prices drive up, what we tend to see is a lot of lending. So we're probably going to see a ton of lending open up to access these asset classes of real estate in the stock market. So we'll probably see At some point, the banks and the institutions almost have to tap out and say, look, if we're not able to give loans from incomes from people's jobs and extend credit based on that, we're going to have to start opening up to these asset classes of real estate in the stock market. So what we'll see is real estate prices go up, and people and they'll still want verifiable income, but maybe the credit not so important, or it'll be lowered, or maybe your income to debt ratio is not going to be as stringent, where you're going to be able to access the equity in your house, right? So they access the equity in their house because the house prices have gone up. They're going to be able to access that new equity that didn't exist, say, pre-COVID or a year ago. So, and which is insane, when you think about it, that prices have actually accelerated in a time where the GDP of the production is very low. So they start borrowing against this new equity, borrowing against the house, and they use that for consumption. Same with the stock market. The stock market is raging. Now, when we say the stock market, remember the stock market represents publicly traded companies, right? And not only any publicly traded companies. I mean, you're talking high 90s percentage of these companies are functional, broad, met highest requirements to be publicly traded on the stock exchange, and those around the world. So a very small portion of the companies out there relative to the stock market are private and not accessed by the public. So when we say the stock market, we're talking about public companies. These are companies that employ people, that make things, that produce things. And right now, they're not, for the majority part, are not producing. They're not creating relative to where they should be if there was no COVID. So seeing these prices go up and access to that capital, which is going to be more leverage, is going to be produced. So we're going to see a lot of credit and leverage and debt accessed during this time, which will drive consumption, right? Will drive consumption. Some of that money will just loop right back into those asset classes, real estate, stock market, pushing them up, producing new equity, opportunities for equity, new lending, back in, up. So the problem with the approach of this is these asset classes they're kind of it's a loop. It's a feedback loop where the prices are going up. I'm borrowing and I'm going to buy more, and the prices are going to go up, and I'm borrowing and I'm buying more, and the prices are going to go up. And this happens in real estate and the stock market, which is concerning because at some point the music's going to stop and there's going to be one less chair to sit on. And for musical chairs, when the music stops, you got to grab a chair. Well, there's going to be many chairs that are unavailable to the average individual. So there's a dangerous game being played with access to this capital and where people are. But if you give people money, you can't tell them you can't put that money in the stock market. You can't tell them you can't put that money into real estate. But the fact that these two asset classes are driving up in the midst of massive unemployment, regardless of what's causing it, massive unemployment, massive loss of production, is deeply concerning about the future. What does that mean for an investor? Well, two things, right? Don't fight the trend. Real estate's going up. Don't fight the trend on real estate, on trying to apply the proper strategies that work in that particular arena, like rent to own and buy, fix, and sell, which are great strategies in a rising market. So don't fight the trend. Even though it's not going to last and there's going to be a shift, that's normal. It's going to happen. You can't predict when the top and bottom is. Don't even worry about it. So we still want to apply the proper strategy. Same with the stock market. For years, I've been hard on Tesla. I still don't believe in the company, Tesla, and I believe in some of the great things that they're doing, but the valuation to me is crazy. So it doesn't matter what I think. The stock keeps going up, and Elon Musk recently was the richest man on the planet, which is funny because you could lose that title to Jeff Bezos, right? I said it right. Jeff Bezos anytime. I mean, the stock prices could move and shift. So net worth is kind of funny in that way. And I think we've talked about the, net worth is kind of a crazy thing to measure wealth with and pursue with. So even though I don't think Tesla's, should be valued at what it doesn't matter. I mean, the price, money still keeps flowing into there. So don't fight the trend. If the trend's going and it trend's your friend until the end. Right? Trends your friend until the end, but when it's over, it'll be bad. So we don't want to own these things long term, assuming that the trend's going to be forever. So if we're owning things long term, we're still really hardcore believers in cash flow, only invest for long-term for cash flow, nothing else. We don't believe in long-term pursuit of capital gains. If it comes, we'll take it, but we don't believe that asset prices, or we're banking on asset prices going up over time. That's how we're going to build our wealth. We want the asset to produce income. As far as we're concerned, in the spirit of Robert Kiyosaki, if it doesn't produce income, it's considered a liability. So it's important to, when you're looking at where to put my money, or what should I pursue, stay away from the prediction. I think is the best thing you can do. Predicting, whether a market's going to go up or down, we only know it after it happens. So these people saying that this is going to happen and this is going to happen, which is cool, that's great. But if we're talking about basing it on investment decisions, you're not going to get a definitive, this is the bottom, this is the top, this is what you do. Nobody knows that until it's too late. If they knew what the market was going to do, it would be a smooth line, right? They would avoid these rapid ups and downs. But the rapid ups and downs, I don't know if you've been to one of our trainings or seen us speak before, we talk about the ups and downs, the red line, that's where you make money as an investor. So there's huge opportunity out there, big opportunity. I think we have talked several times about the laws of wealth. Stay in tune with the idea that all wealth is created. Know that you can create wealth anytime. Know that that's an opportunity available to you. If you want to understand, and something we also said is, the more you know, the less money you need. Big. This is a universal truth for us. The more you know, the less money you need. This is it. So we're creators. We're creators of solutions for problems. The bigger the problem, the bigger the paycheck. That's what we pursue. So there is huge opportunity there. Don't get down or frustrated. I think for at least long periods of time, that there's an opportunity there, or things are difficult. This is a great opportunity to make money. There's huge opportunity in particular industries. Go where the money is. Follow the money, and you'll be fine. And I think that you have to ask yourself, I don't know how many of you out there feel like there is too much money, or someone can have too much money. This is a serious problem in our view. This is a serious problem. If you believe that someone can have too much money, I think it's going to be difficult for you to pursue wealth with that mentality, because the more money you make, or the more wealth that you have, the more you get closer to that point where you shouldn't have money. And on a psychological or a subconscious level, we believe that you're gonna end up sabotaging your success because of that. So I think it's a fair question to ask. Do you think that you have too much money, or you can have too much money? It's something that I believe for many years. I growing up, I thought having too much money was a real thing. I don't anymore. Not at all. I think again, you should. I think it's a moral responsibility to create as much wealth as humanly possible in your lifetime and redirect it where you see fit. I really, deeply believe that that's a responsibility for each individual, and not only that, to pass on the legacy to your children, the people that you care about, the people that you can affect, whether it's your community, your church, whatever holy place that you believe in, that you want to share with, that you want to be part of that community. I think it's important for us to share that knowledge. Pip's been doing that a long time, longer than anybody I know, sharing that idea of wealth creation and sharing the understanding of it. So in the spirit of that, we've been doing this a little while. It's been a decade for me. Pip, how long has it been for you?
Well, teaching it 16 years.
16 years. So a lot of people affected by the philosophy and the belief that there's enough, there's lots for everybody. I think that we want to continue in that belief. We want to be happy for other people's success and their growth, and we don't want to believe. I'm sorry, I laugh now because I was so much on the other side, that you can have too much money. I mean, and I think we've talked about where money, the whole money thing and fiat currency. We've talked about that, right? We talked about fiat currency and
talked about 5 laws of money, but we haven't
right.
gone them in a deep.
Yeah. So yeah.
Dive of those kinds
of the ones.
I was wondering when I get a chance to
talk.
Oh. I'm at 22 minutes without saying a word.
I'm sorry, buddy. You're supposed to tell me. Good. You know what?
I'm supposed to tell you.
You're supposed to, hey, you're supposed to go, or just jump in, buddy. He's a polite guy, this American. We might even think he's Canadian sometimes.
Well, we're getting lots of good comments. The more comments, the better. I can't really say much about the comments because Sam doesn't shut up. So, but yeah, and no, I haven't been doing this for 60 or 80 years. Steve and Rob, that's not a very nice thing to say.
Nice,
Um,
nice.
but yeah, I want to just focus on a couple of things that you
Sure,
said, maybe
sure,
a little different way.
sure.
I mean, we always talk about what's the unemployment rate,
Yes.
and I mean, whether it's 6%, 4%, 3%, 12%, whatever. I like to always look at the bright side, the positive side. So if we've got 6 or 7% unemployment, that means we have what? I'm not very bright, but what are the numbers? We got 94% employment.
Yeah, yeah, yeah. Of the people that can be employed, yeah.
So I like to look at the fact that, yeah, even though there are a lot of people out of jobs, there are a lot of people that still have their jobs. I was talking to somebody yesterday, and she's like, "This has been the best year our company's ever had." And I'm like, you don't hear all we hear is on the news is the negative, negative, negative. Now I think, and this is part of the challenge we're seeing in the world today, is that COVID has shut down a lot of small businesses that didn't have very deep pockets, that are maybe not, and this is where the argument comes politically from an essential service concept. Why can a large store be open, but not the mom and pop store that sells similar stuff? We see some of that. Right or wrong, I'm not going to get into that political discussion, but some of your big companies are doing very well, your publicly traded companies, because I mean, Amazon has become the biggest company probably in the world. I don't know if they're the biggest company in the world, but they're right up there.
Yeah, yeah. And they actually have a very small percentage of actual sales. Online sales is relatively small to all online sales, but they're a monster. They're a monster, yeah.
And so, I'm interested always in that, companies like Tesla and all those. And that somebody asked about a rumor, is Tesla going to get buy out one of the major three? I don't know. I mean, I've heard that
They
rumor.
might be doing the buying. They might be doing the buying. Tesla might be buying one of the three. That's totally possible.
Well, and the interesting thing about Tesla, what I like about Tesla, whether you like the cars or not, they've built their business in a much different way than all the big three. You don't see all the marketing, the TV commercials for a Tesla that you do for GM and Ford and Chrysler and even the other companies, whether it be the European or the Asian car companies. I mean, it's a different, and I think that's what's cool. And somebody said that means with COVID and everything that there's opportunities. I think with any market, and I love the Kiyosaki philosophy. He says when a law changes, an opportunity arises. When markets change, opportunities arise. And you can either focus on the bad stuff that happened to you and everybody else, or you can focus on, well, what's the opportunity here for that? I mean, and we could look at a lot of different industries in that way, but I like to focus on that positive side of things. The other thing I want to say, Sam made the comment that was it 20% of the lowest paid people, those are the ones that are unemployed right now.
Yeah, which is scary for consumption because they drive a lot of the consumption, right?
But it's great if you're a multifamily property owner too.
Yeah.
Because those people that may have been able to own a home can no longer own a home probably, but so their cost of living goes, their cost of ability to buy or to consume, as Sam says, well, what are their consumption is rent or utility of living. So maybe they have to go into a lower price property that, is a duplex, a fourplex, a 30 unit, whatever it may be. And so there's opportunities as long as you have that knowledge to do that. Opportunity gave me the time to connect with you all. Well, Wendy, that just made my whole day that you just said that. And Wendy said, COVID opportunity gave me time to connect with you all. That is awesome. And you even said that kind of like I would say it, y'all, instead of, you got to take the a couple of those letters out of there, maybe you just need y'all, something like that. So, but yeah, that's cool even for a Canadian to say that. But yeah, that's awesome. But I think there's opportunities, and we got to focus on those. Are there going to be challenges? Yeah. And Sam and I were talking about this yesterday, and you can get in the argument about COVID. We're talking about the discrepancy of less than 2% of Canadians have COVID, but 6% of Americans, depending on what statistics you're looking at. Yet U.S. is not shutting down in most places. They're talking about opening up more, and yet Canada is talking about.
And the Canadian would argue the reason we're at 2% is because we're so hard on it, whereas the U.S. is higher because they're looser at it. And again, How many lives will be saved? Which approach is better? This is something history is going to tell us the story, the end of that story. We're not going to understand in the midst of it. Yeah.
It's for like the market. I mean, when it's going up and down,
yeah.
You don't know. You can talk about it after it happened. We can tell you exactly what the market did yesterday.
Yeah.
I know exactly. I can
100% prediction. Yeah.
By every 5-minute mark, I can tell you what stock market did yesterday. I can't tell you what they're going to do tomorrow. I can thoughts or trends. But, the one thing I want to say about this, and this is, I've not made I've been on Facebook with these lives for 6 months now in different arenas. And I made that comment yesterday. I never was on Facebook. I had an account only to have more friends than my wife. And that was the only reason I ever put the account out there. And then when I got more friends than she did, it was like, what's the competition's over, obviously. And so I'm not a Facebook fan, but if this is the way that we can talk to people, great. This is the way that we can connect with people, great. But the one thing I want to say about COVID, and I know my brothers might have a totally different opinion of this. My sister may have it. I mean, we got 6 of us in the family. We probably all have 6 different opinions, and there's nothing wrong with that. But it's really easy to sit here and if COVID hasn't affected you, whether it's your income, whether it is, and I don't even think income's the issue, it's your health.
Yeah.
If it hasn't affected you, it's really easy to sit here and say, well, it's no big deal. But if somebody in your family has died from it or something similar to it or whatever, your opinion of COVID is going to be totally different than the person who hasn't had that happen. I've had nobody close to me pass away, but I obviously have friends that have had people pass away. So your perspective changes depending on how you've been affected by it, obviously. And so, I'm not saying it is as bad as it is. I'm not saying it's as good as some other people. It's something we all have to deal with.
Yes.
I just wanted to say that because I don't like to get into politics, but I just think if your dad or your mom or somebody died because of this, you probably have a different opinion of COVID than somebody like me who has not been touched by it, as I knock on wood. I had a daughter that had it, but she's 18 and healthy. She had a headache for a day and she's done. And so that was it. But other people have seen a lot worse issues with it. So
I think social media is a great thing. It's sometimes a challenging thing. It's definitely a mob mentality. I think that's what a lot of growth and opportunities been created with these companies is because of the internet and it's mob. it's Roman mob mentality, right? They control the trend of things. They control, at times moments where they control what's right, what's wrong, how harsh judgment should be. So it's a great tool like anything else. The more powerful the two, the more dangerous it can be when used improperly. And money is no question in that same category. Going back to money, and I know many of you already know this. I don't know, for the most part, US dollar, Canadian dollar, the pound, the euro, these major currencies are all fiat currencies. Fiat is Latin for let it be so, some form of that, and it's mandated currency for us to use. And people still have not a lot of faith in currencies. Some people think the currencies are going to collapse because there's really nothing backing the US or say Canadian or Australian dollar. If you're from Australia, New Zealand, same thing. There's nothing backing these dollars. So what does that mean for you in the way of dollars? Should I keep dollars? Well, still dollars is the most efficient way to store wealth, believe it or not. There is inflation, but the inflation rate of dollars for most currencies, stable economies, is less over time than a lot of the other things out there. So we still have the opportunity to store currency or have our wealth in currency. The dilemma with putting your money in currency or in leaving it there, that's not a good idea, like anything else, right? So you want the currency to move around, you want it to invest, you want it to have, you want to invest it and have it bring some new friends with it, so you grow that wealth. So saving, and I think we mentioned this before. We did so many things, Pip, and trainings. I honestly don't know. Saving is more hoarding. You're really hoarding money. You're not really saving it. Hoarding. There's only one way to save money. Everybody ready for this? Big idea. Only one way to save money. You have to spend it. You have to buy things for a lower cost than their value. That's how you save money. So if I buy a property for 70,000 and the value is 100,000, I saved 30,000. You can't really save money in our view. You can't really save money by taking it and putting it in the bank or under the mattress. That's not really saving. That's hoarding. Hoarding is taking something that has a use and not using it for that. So hoarding is really what we call, a lot of people call saving. We don't, because you can't save unless you buy. So consumption is very important. How keeping that money circulated and continuing to invest in assets. All that being said, regardless if you think the US dollar, the Canadian dollar, whatever dollar, the New Zealand dollar, Australian dollar, the pound, euro, if you think those things are going to collapse, you should, let me say it from our view, you must go in debt, like deliberate debt. You must go in deliberate debt as fast as you can if you think the currency is going to collapse, because if the currency collapses, you only owe back that money, that currency. So if you have $1 million mortgage in Canadian dollars or US dollars, and the economy collapses, say in Canada, so let's take that Canada, you buy $1 million house in Canada, you have a mortgage with the Bank of Montreal or Toronto Dominion, TD Bank, you have a mortgage with them. Our Canadian dollar collapses, and now we're using US dollars because Canadian dollars are just almost worthless. In fact, it costs you, $1 US dollar is 1,000 Canadian dollars. Let's say that $1 US dollar is 1,000 US Canadian dollars. I'm sorry, is 1,000 Canadian dollars. So think about that. So that's 1%. So if you had $1 million mortgage, you could pay that back with 1%, which is $10,000 US. You could pay off that mortgage. Because you bought it in Canadian dollars, that's the currency you bought it with. You could use the US dollar, convert it into $1 million Canadian, 10,000, and you could pay off the mortgage, right? So if you're worried about it collapsing, then definitely you want to get as much debt, on these assets. You really do. And if you own this house and the value is trapped in Canadian dollars, you can have a serious loss of capital because of the inflation and at some point deflationary impact of those assets. So if you think things are going to collapse, go into as much deliberate debt as you can. We call it deliberate debt for a specific reason. It's deliberate because we're doing it specifically to make more money. We're not just going into debt randomly. It's deliberate, it's methodical. There's a plan, there's a system. That's what we do. Now, if you don't think there's going to be a collapse in the currency, you must go into debt. Yes. You still must go into debt. Why must you go into debt if the US dollar or the Canadian dollar doesn't collapse? Because if you're not going into debt to make your returns, then you're making small returns, or you're making risky investments that are making, have a higher potential return. So what we do is we take low return, low risk, low return opportunities like real estate. For us, real estate is a low risk opportunity. It's a very low risk opportunity when done properly, obviously, but it's a low risk opportunity. So the yield on real estate for us, we recognize, is roughly around 1%. So we know it's around 1% in its current state. Many places around metropolitan areas, you're looking at a capitalization rate of 2 or 3%. Some places a little bit higher, some places a little worse, but healthy metropolitan economies, you're looking at a cap rate of 1 to 3%. It's pretty tight, which means that if you paid it off, you would make a 3% yield. So if I did $100,000 property and I paid it off, I'd make $3,000 in net income. Now, of course, this does not include inflation and some other costs that would be incurred. But this is the real big one is inflation, because you paid all your bills, the net operating income. It's about $3,000. Now, $3,000 on $100,000 sucks, right? 3%, it sucks. So what we do is we use debt to take that 3% and turn it into 30%. Yeah, looks like magic, but it's real. We use leverage, we use debt to take this 3% return and turn it into 30% return, right? Now, we haven't changed the structure of the property, but we changed the structure of our investing. That's what we do. So we look for low risk opportunities. We use debt, and it's virtually impossible. I don't know of another way to take a small return and make it into a big return unless you use debt. This is exactly how the banks work. The banks in any modern economy use leverage. They use debt fundamentally to offer you a low cost mortgage or low cost loan, and they get to use something called fractional reserve lending, which allows them to take a 3% return on a mortgage and turn it into 30%, or a 6% personal loan and make 60%, right? Which is insane. And I don't know exactly what it is in the US. It's pretty close probably to Canada. It's about 60% is called, anything above 60% is like loan sharking in Canada. You can charge someone 50% interest and still be in the legal limit in Canada. I'm sure it's somewhere around the same in the US. Now, make no mistake though, the bank is not charging you 50 or 60%. So when a bank charges a 6% personal loan, and they only have to put up 10% of the loan, they're basically making 60% return. Now that may seem illegal or outrageous, but there's a benefit for us individually. And we talked about this. Pip mentioned, I think you mentioned just earlier, about win-win transactions, or integrity. At least I don't know if integrity is the right thing when you're dealing with banks, but there's definitely a win-win situation, because we get low-cost capital and they make a huge return on it. So what we did is we took what the banks do and we applied it to real estate. We applied it to the stock market. That's why we're so successful. I can't, if you haven't received some sort of education about finances and money related to real estate and the stock market, I strongly support the idea of doing that. These ideas you're not going to hear in the mainstream. You're not going to hear in the mainstream, go deliberately in debt. You're not going to hear in the mainstream that you should never pay off a mortgage, right? You should stay in debt. You're not going to hear in the mainstream that if you think the economy is going to collapse, go into debt. You're not going to hear in the mainstream that you should be, that you can't have too much money. You're not going to hear these things. You're going to hear things like the wealth disparity is wrong and rich and poor, and this stuff. I can't. It's garbage. In my view, 100% it's garbage. It's detrimental to an individual to believe in these things. And if you're out there and you believe these things, I don't mean it in a personal way. I don't. Telling your children or telling your people around you, like, making your kid feel guilty about being wealthy or having money. Think about the impact of that. Like that's a serious impediment for that individual to build wealth. If you unintentionally make them feel guilty about money, that the money. Robert talked about this in his book. Remember, he talked about his father being the school administrator, teacher and administrator, and how he basically was telling him that wealthy people are bad, that it's much more noble to not have and, struggle and work hard than it is to, be wealthy, as though wealthy people don't work hard. I don't know. I don't know. Nobody knows the end of the story, right? Pip, we talked about this before, right? The Olympic athletes, we see them, but we don't see the work that they put in to get where they want to go, right? So this figure skater looks great and looks so beautiful and graceful and simple. Go ahead, Pip. Yeah, I mean, we talked about this.
Yeah, I have to share this story. I don't think she will be on here right now, but one of our business partners' name is Bradley, and his fiance is from the Baltimore area. And back in high school, Michael Phelps, you might have heard of him. He's won a couple of medals in the Olympics. I think the most medals of anybody ever. Asked her out on a date and was wanting to date her, and she thought he was a dorky kid. And he told her he was going to win all these Olympic medals, and she said he's nuts. Well, obviously he did, and so it's an interesting story, but it's just quite funny. But not even ask the question. They put a thing up here, and it's a young lady from my high school, and so my hometown. And what did you say? Because I obviously missed it. Because, well, first of all, I'm not really listening to you. That's probably why. That's the first thing. But made a comment that your I want to make sure I don't miss it up. That the exchange rate for what you said from U.S. to Canada was incorrect. I don't even know what you said, and maybe you were exaggerating.
Huh? The exchange rate. You mean the $1 million? Is that what
I didn't hear what you said, so I don't know what the question really is even. I'm not kidding you.
That's all right. That's all right.
I'm trying to reply to people, and I wasn't sure what was. I missed
okay. So if there's something that we do say that you disagree with or you think is incorrect, math might be one from time to time. That's incorrect. Forgive us. Let us know. We'll correct it. I do want to be accurate on the math, but I can be. I think it was a reference to the $1 million and 1%. See, I'm gonna pull up my calculator and check. Here you go. Let's check.
So
1%.
one of your fellow Canadians just said the exchange rate's 1,000 to 1.
No, no, no. No, no, no.
Steve
No,
Hipple
no.
just said that. Steve Hipple
No,
just
no, no. Not exchange rate. I said if the Canadian dollar collapsed and the exchange rate was 1,000 Canadian dollars to $1 US. That's what I meant. If you thought that the Canadian dollar was going to collapse, no, the exchange rate, that is incorrect today. Thank God. That is incorrect today. That is not the exchange rate. It's closer to something like $1.35, which is, somewhere in the range in the 30, $1.30 a change. That's what the exchange rate. We were talking about collapsing markets. So if the Canadian dollar collapsed, yeah.
And I was trying to
I'm glad you asked.
I was trying to answer a question. I want to make sure we didn't screw up something on the map.
So
we always have an opinion, and there's nothing wrong with other. We love other opinions. So that's yeah. So I just yeah. And so we just want to make sure we're on the
yeah, for sure. A quick note: in South America, one of the reasons actually the U.S. has a 30-year fixed mortgage opportunity, and other countries don't, is because of the faith they have in the dollar itself. Places like South America, it's tough to get long-term mortgages because they've had so many currency collapses in South America that there's just no faith, right? Because imagine it, if you're the lender, how can you lend if you're concerned that a year from now, 2 years from now, inflation's going to deteriorate, because you locked in the loan, you're not going to get your money back, and inflation's going to deteriorate any money you do get back, any value. In economies like that, literally the workers will get paid and they'll spend their money right away. And it looks like there's a boost in the economy, but what happens, they're spending it right away because they know by evening, the dollar is going to be worth less. That's when inflation's, in a collapsing inflation. If you ever want to look at a history of that, Argentina is a great place to look at for currency collapse. Even Germany after World War II, very, very, a good example of the impact of a collapsing currency and what it does. It's horrific. It's really horrific, and it's difficult. And it's really countries, individual citizens of that country go into survival mode. It's not a pretty picture, and it's not an easy thing to recover from because it's confidence. It's something intangible, right? And the US dollar to this day still has the greatest confidence. Hence, when you do a 30-year mortgage, they believe pretty much that they're going to get, what they thought, right? There's going to be deterioration of inflation, but they pretty much believe that they're going to get that. Same in places. It's funny, I mentioned Germany. Germany's very much feels that way. And there's certain countries in Europe that, like the UK, which is still a financial capital of Europe, for sure. I mean, still huge, bigger than anybody. There's confidence in that. And I think that currencies themselves, I'm a big believer in fiat currencies. I think that they're absolutely the best thing. I don't believe that we should go to a bartering system. It's extremely difficult to compare what's good value. If let's say that if you could get in a bartering system, 6 goats and 2 sacks of potato could get you a pair of Nikes. And let's say Adidas is selling their shoes for 3 cows and a bushel of wheat. How do you compare these two things? How do you say which one's the better value for me? It's really difficult. Bartering is very, very hard and complex, especially if the person you're bartering with doesn't want your stuff. So if somebody said to you, you're a carpenter, or sorry, let's say that you're what's a suit maker called again? If people make clothes, what are they called? Seamstress? I don't know. The people that make clothes. Say dress person, somebody who makes suits. Somebody who makes suits. So say you're a guy that makes suits, and a guy comes to you and he says, I hear you're selling suits for 2 pigs and a bushel of corn. He says, you know what? I was, but I'm all stocked up on pigs and corn. So you know what I could really use was cows. So then you got to go and make a trade for cows so you can get cows so you can buy the suits. So you have to take your 2 pigs and a bushel to go buy. And let's say the suit maker said, I want 2 cows. So you go there and you say, look, what's the exchange on cows to pigs and corn? He says, well, it's 3 pigs and 2 bushels of corn. That's the sense of inflation, right? Because now you got to buy those things just to get the 2 cows, which what you could have got was the 2 pigs and the corn. A lot of animals in here and things, but go ahead, Pip.
You think you were from farm country
Yeah,
rather
yeah,
than.
yeah, yeah, yeah.
First of all, Steve Andrews says it's a tailor is who you're trying to think of.
Yes, yes, a Taylor.
Secondly, Sam Moose, if I could give you just one little tip from Pip on this,
Yeah.
table. Every time you hit your table, it's going through your microphone, and it's
Oh,
real.
is it? I'm sorry.
No, and you did it.
Passion. This is, we get crazy. Sorry about the drumming. Sorry about that.
And we're way late again. As
Oh yeah.
on this, it's supposed to be 30 minutes. So obviously, great stuff on that. And I go back to it, and this is kind of funny for me because when I grew up, my parents were in the grocery business, and in the 50s is when my dad started his business. Actually, started owning a grocery store in 1948. But when I was a kid, my dad and we lived in a farming community, kind of right outside of a farm. We're this county seat for a bunch of farming areas in Nebraska City. But anyway, my dad and mom always used to use the term so and so trades with us. Oh, the Smiths trade with us, or whatever. They trade with us. And I always thought, well, that's an interesting term because I didn't quite get it. In the 70s and 80s, we were always taking cash for stuff. That's how old I am. Well, I asked my dad about it one time. He said, well, yeah, when we first started in Nebraska City, when a farmer would come in, they would bring eggs and they would trade us eggs for sugar. And literally, that's how they did business. I think to me, that has got to, and it was also interesting, and this is where price fluctuations were not that much. The prices of goods stayed very steady because it wasn't set so much on, and the way pricing is done today, it was more set with the fact that, who had what to trade for this and that. And the farmer would not come in with money, they'd come in with eggs or something like that. So it was interesting to see that mentality, and it was not that long ago. I mean, if I can remember it, and I know some of you guys think I'm really old, but if I can remember it, obviously it wasn't that long ago. It was at least in a memorable time frame for some of us on this call. What do you got, Sam?
I was gonna say, how crazy exchange is, and where exchange can exist. Prisons, for the longest time, prisons used cigarettes as currency, and you didn't need to smoke cigarettes to use it, right? You could still trade for it as long as there was enough people who wanted the cigarettes. That was the form of currency. So when they banned cigarettes from the prison system, like you can't smoke anymore, I believe that the new currency was mackerel. Yeah, that's right, mackerel. So they used, it was first canned. It was first canned, and then they started using pouches because the can could be used for weapon. So the pouch, and the pouch could be bought from the commissary for $1. So it was easy exchange. So one pouch was like $1. That was the exchange rate, right? As long as people believe that this thing can store value and there's a demand for it. And because these things, I mean, if they're kept in the pouch and in the can, I mean, they don't go bad. So, if you can store value, it doesn't matter what you use. In fact, salary, the origin of salary was the way the Romans were paid. It means salt, like they were paid in salt. So these things, it's not as simple as it looks. It's simple when you understand it, but when you don't understand it, it's hard to understand why there's value or why we believe that money has value. As soon as you start ripping the veil off, and start looking at it, you get very nervous about what is this? This looks like a fiction. But as you go deeper and deeper, you start to realize the sense behind it and what the real essence of currency is, and credit is. And it's really trust. Credit is actually credo, right? Latin for trust. So the trust factor is very, very important in currency or any form of exchange, which has been seashells, which has been gold, silver as a primary, copper. I mean, all these things have been used and they've went away, and we come back, which is crazy, but important. We've come back to something, paper, that actually has zero intrinsic value, like zero. It's a dead note, actually. That's where we've come from things that were actually substantial, real, and had some properties that you would think were important. So Pip, I don't know where we are. Before we go,
53 minutes is where you're.
we need to wrap up. But before we do, a couple things, a couple announcements. Pip is writing a book. So I think that everyone should get ready. When that happens, we'll let you know so you can read about it. It's going to be a little bit about himself, his life story, and how he came to be and what are some of his important goals and what he's trying to achieve, his legacy. And of course, there's going to be some investing tips in there for sure. I'm also writing one, so there's some promotion for me too, Pip. I'm also running one about the five laws plus one of wealth. When that comes out, we'll let you know for sure. And at some point, I'm sure me and the Pipper will write one together. We'll see. We'll let you know. So there's more to come. The one thing we love to do, and I think is important. Oh, Pip, wait. Also, let me make one more announcement. There's the Pip's Path Challenge. If you're not already on the challenge, Pip, can you put that in there and let them know that there's a way to, we're doing a challenge. It's a 5-day challenge. It's Monday to Friday, 18th to 22nd. Is that right, Pip? Is that 18th to 22nd? It's 1 hour a day. It is between, it's 12 to 1, Pip? I get that right? Or 12 to 1 Eastern. Is that right, Pepper? Eastern, 12 to 1 Eastern, 1 hour. We'll be giving away some cool prizes for participation. You must participate and engage. Our goal is to teach you a little bit more about the depths of lease options and rent to own and what the opportunities are there. So you're more welcome to join. There's zero cost to do this, folks. You can participate in the challenge. We want you to be there. If you're interested in learning more, just click that link that Pip shared with you and you can sign up. Okay. So if you're not already in there, those of you already in there, awesome. We'll see you on the challenge. Those of not, take a look at it. If it's something you think is a fit for you, absolutely do it. And all of you, share with other people, share the wealth, let other people know that are interested to learn a little bit more about rent to own, which is one of the strategies I mentioned at the beginning, which is an opportunity strategy when markets are rising. Okay, we'll talk more about that. So it's so funny.
Okay, so and this is why for me, I've got a young lady on here. Her name is Jeannie, and she's a year ahead of me in school in Nebraska City. Her parents own the hardware store in town, and so I've known her forever. And so Jeannie, and and Jeannie could probably, I don't think I've talked to her since at least first or second year of college.
That's awesome. That's awesome.
Forever. And so what was that, 10 years ago, I'm guessing, that I was in college, maybe 30 years ago now. Jeannie says to me, she says, so you're talking about books. He goes, he better talk about his great junior high saxophone section in band. We played saxophone together. So
wow.
Yeah,
there you go.
To hear that on one of these is so cool. So Jeannie,
it is
my day by putting that on there. And so that's why I have to shout you out. That is awesome, Jeannie. So
I used to play the trumpet if anybody's interested.
No, we're not.
At it.
Okay.
Trumpet, great instrument if you know how to play it. But yeah, saxophone's the coolest though. So yes. So those are the announcements. We also would like and what are we gonna say? I
got people coming up here. It says, is the going to jail story better than whatever I just said? I don't have a great, I was just excited that Jeannie even mentioned something from literally 40 years ago, which is kind of bizarre to think.
So you know what we'll do, Pip? We're going to do the going to jail story on our next show. You're going to share the going to jail story. Are they talking about you?
Oh yeah. Well, have you been to jail?
No, but you know what's funny? If we did go to jail together, we'd know how to invest what we need to invest, and that's mackerel. Yeah,
mackerel. We need mackerel.
Sorry about the begging. Mackerel.
Yeah, I went to jail in Hong Kong for whoever's on here.
I don't think mackerel. I don't know. Would mackerel work? What was the currency, Pep, in Hong Kong?
Wasn't there long enough to barter anything, so I. Thank goodness. But I was there for a day.
Yeah,
that was interesting.
So before we wrap up, okay, want some comments about topics you want us to talk about in the coming weeks. I want you to throw them in the text box. We're going to announce them right now. So if there's something you want to talk about in the coming weeks, we'll steal a couple ideas from you, and then we'll build the next few shows with that in mind as we develop the ideas of wealth. So what are areas that you'd like to know more about? Just pop it in the text box. We will definitely do our best to incorporate them. Pep, what do you got?
Sam really wants topics that you can discuss and argue about.
Yes.
I am the least, I don't like to argue at all. I hate arguing. It's not my style. I'd rather be happy than right. But Sam wants a good debate and a good discussion.
I do. So give me something tough. Give me something tough. I'll give you a tip out there for those of you who like to argue, which I bet you is a good chunk of people. You don't need to have an argument to win an argument. Everybody get that? You don't need an argument to win an argument. All you got to do is prove the other person wrong, and that's easy, man. That's all you got. You don't even need a counter argument. You just got to prove the other person wrong, which is not that tough for most people, because most people don't take the time and energy and the depth to understand what we're saying. Yeah, Pip?
5 laws of wealth. They want to talk more about those.
Yeah, we're gonna do it. Yeah, give me. You know what? Let's. We'll go deeper into each one of them. We did say that we were gonna talk about that. So give me the one. We're gonna do all 5. Plus, there's actually 6. So give me. You know, if there's one that you want to talk about, an area you want to talk about in that particular law, we'll talk about them. They're very. They're important. We believe that there's some heavy duty insight that you can have in your own individual economy. It's important. We really believe it's important. So yeah, we'll talk about the 5 laws for sure. Anybody want to fight about anything? Anybody have anything that they want to, that we, you know?
How much coffee have you had in the last hour?
Well, you know, I love my coffee, Pep, and yes, I've drank a few coffees. I think coffee's a great beverage. But Pep, we're gonna have some guests too, Pep. Isn't that right? We're bringing some guests on.
Well, I don't think we've confirmed anything, but we sure can. I mean, the less you talk, the happier I will be. So I think that's a good thing right there. But
it's 9 o'clock. We should really wrap up because yes.
Just real quickly, the only other thing I could ask you guys. First of all, I love the comments, and I'm trying to type in as I talk, and I can't hardly even walk and talk, let alone type and talk. So yeah, I do want you guys keep making comments. The only other thing I would ask, if you guys could share this with anybody, that would be cool. So if you could share it with anybody, we would love that. So that'd be awesome. That's all I can say.
I would love you to share it with someone that would just think that we're crazy. I'd love that. If you could just bring somebody on, like, these guys are insane. Who are these guys? Yeah, so people that you don't think, you know, that would really like us, that would really dislike what we're saying. I'd love to have those people on the show. They have some great comments. Some we might have to censor, but that's okay. We're okay with it. We're adults. We can manage it. So bring on some haters. People are like, that's crazy. Money's bad. Yeah, bring those people on. We'd love to have them. So we will talk about the 5 laws of wealth. We'll talk about the 5 laws of wealth, folks. That will be part of our show. Please, if there's other topics you want to talk about, some area you want to understand better, let us know, and we'll build that on. Right? I'd love to put more into particular areas if you want them. We're just talking about stuff that we think is cool. But if you think something's cool and you'd like to know more about it, please let us know. Pip.
Adios.
Adios.
We'll see you later. Wealth debate.
That's wealth debate
next week.
Pip Stellick, Sam Musa, wealth debate. Yes.